Hey everybody, today's February 25th, 2024. Today I'm going to talk about the stock market and where I see the stock market headed in March. Please read the disclaimer before you continue watching this video. You can pause this video as you read it. Okay, so last time we left off, I said that I felt like now we're getting close to all-time highs, or actually we broke above all-time highs, and I thought we were going to consolidate more around this, a previous all-time high level, right, which is basically this Fibonacci level. However, we ended up breaking above it and going higher because a lot of it has to do with the hype around the AI, right, and generative AI, machine learning. Like stocks like Nvidia had just been going to new all-time highs, and that's really putting a lot of it's a lot of tailwinds to the upside, right? Now, interestingly, we had a more bearish than expected CPI report, right, for the month of January. Even though we saw the CPI, the inflation coming down from 3.4 in December to 3.1 in January, the street was expecting 2.9. So it didn't come down as much as expected. So we saw like the stock market drop, but it suddenly recovered, right? Because I think part of it was like, even though it wasn't as big as people expected, it was still overall a downward direction, which is what we want to see. So I think the most important thing is now for the February report, right? And we also have a Fed meeting. So we want to see CPI continue down lower, ideally below 3%, right? And I think that's going to open this. So I think at this point, most people don't expect a rate cut in March, but I think that it's probably going to happen sometime either in Q2 or Q3, right? As long as inflation continues to go down, right? So ideally, we'll see CPI report come out over the next couple months to signal it going down below 3. I think when it gets below 3, gets closer to 2%, which is the Fed's target, then we're going to start seeing cuts, right? With the Fed interest rate, Fed funds rate over 5% right now, right? So there is, some room to cut. We can do the Fed will probably go slowly, right? Maybe like 25 basis points, 50 basis points at a time. But yeah, I don't see the Fed doing like a massive cut anytime soon, because if you think about it, the interest rates are one of the Fed's main weapons to, combat, inflation, right? They're going to raise interest rates to combat inflation. But the economy is doing so well right now, right? We've seen really great job reports. The economy is very strong, and there's really no sign of a recession coming anytime soon, right? Or like that's what we're hearing. So if there is a recession coming, right, then the Fed could always have more. They can always lower interest rates to fight that. And so if they just lower interest rates too quickly while the economy is strong, there's not much they can do if a recession does come eventually, right? So the Fed, if you think about it, has an incentive to keep interest rates as long as possible, which is why I think that if we do see cuts, it's not going to be like dramatic, like 100 basis points, something like that. Probably slowly, 25, 50 basis points at a time, right? So, but the most important thing is that we do see the inflation rate come down, right? Because as long as it comes down, then there's a higher probability that the Fed will cut rates, and that's going to give more tailwinds for the stock market to go higher, right? So, but keep in mind that the stock market has been like going up significantly, again, mostly based off the A-high, trades, right? So we are overbought in the RSI in a weekly scale, right? You can see the fear and greed index is in extreme greed. Now that doesn't mean we can't go up higher, right? Obviously, we just entered extreme greed, but when you get to this level of sentiment where everybody's super bullish, right, you generally want to be a little careful. I'm not saying you have to short the market or get out, but this is probably not the time to leverage up on like bullish positions, right? Not financial advice, but just my experience trading for over 10 years, right? But overall, with everything that's going on, with the earnings season, with the fundamentals, the Federal Reserve, interest rates, inflation, and just the overall sentiment of the market, everything seems to be pointing that we're going to continue to go higher, right? VIX has also been going down. And you can see how there was many attempts to try to short this market, right? Seeing uptrend, but every time it gets basically neutered downwards, right? So a lot of people trying to short this uptrend, but getting wrecked, right? That's also another sign, right? So in my opinion, I do think this market will continue up sideways, but we should tread cautiously, right? We are in price discovery mode with the S&P over 5,000. So what are my predictions for March, right? What are my predictions for the next month over here? I do think that I like to be a little bit more conservative, cautious. I think my last prediction was that I think we're going to move sideways and try to defend this new all-time higher level, right? and see if we can hold that level. I thought we were gonna come down, tread sideways, and move up higher, but we end up just ripping up higher, right? So I think a lot of it's gonna depend on what we see in the next inflation report. I think this is the big one on March 12th, right? If we see inflation, if CPI come down even lower, below 3%, I think that the probability of a rate hike goes up. I'm sorry, a rate cut goes up, and that's gonna get more tailwinds to push the stock market higher. If we do see inflation go up, like 3.2, 3.3, right? That's obviously going to be bad because now we've seen not only probability of rate cut go down, but we actually might see a rate hike, right? Although I do think the chances of that are a lot lower than in the past. But personally, I do think that things are all overall looking optimistic, and I feel very bullish on the market. But again, we are in territory where there's a lot of bears are going to come in and try to see if we can take advantage of any weakness in the market. So I would just say tread carefully. I'm cautiously optimistic, and I do expect the market to try to defend these levels. So now that we've broken above 500, I think that the bears are going to try to push it below 500. We have a nice gap up over here. They're going to try to fill it, and of course there's several gaps over here as well, right? But if the bulls can defend 500 or 5,000 on S&P, I do think that's going to have more room to run up higher. And of course, we want to wait and see what the CPI report is in February, and see what the Fed might do, because that's going to either be a tailwind or a headwind depending on the results of that. But overall, again, summarize, I do think the market will try to defend 5,000 for S&P, and if we can, definitely continue up higher. I don't see anything slowing down for the AI revolution that's happening right now. NVIDIA just reported great earnings and just gapped up to new all-time highs. So again, cautiously optimistic, but overall optimistic and bullish on the market. And we'll definitely come back in late March to see what I think, to update you on what happened in March and see where I think the market is going in February. Thank you for watching this video. If you found it helpful, useful, or informative, please like this video, leave a comment below, and subscribe for updates. Appreciate all your support. Thank you again, and have a great day.